GM.
We are live. GM, everyone. Welcome back to the SolanaFloor weekly recap, where we're going to break down Solana's biggest stories straight from the SolanaFloor newsroom. I'm joined, of course, by our senior journalist, Finn. Finn, GM.
GM, Jack, how we doing?
We're doing great. And the one and only Mr. Thomas Bahamas also joins us. Thomas, GM, how are we doing, sir?
GM, I am doing great. Happy Friday, everyone.
Happy Friday. Now, as usual, we're going to break down what's moving the ecosystem, what's just a bit of noise, and what's actually worth your attention. I think it's safe to say that all eyes have been on metals and the parabolic rally that we're seeing over the last couple of weeks, but it really sort of crescendoed when we saw that massive breakdown. And we'll touch on price and metals in just a second. But there's also plenty happening within the Solana ecosystem, I think, from the meme coins staging a bit of a comeback. We've got some NFT meme coins in there as well, potentially. That's going to be a big story, all the way to billion-dollar asset managers like WisdomTree that are now making moves on Solana. They bringing a tokenized fund to Solana as well, which is super exciting. And of course, there's always news from the Trump family. The Trump family's World Liberty is once again in the news with their USD1 stablecoin. Thomas Bahamas, I know you've been covering that, so we'll talk about that in a second as well. Finn, Thomas, before we get to these stories, which I think are quite juicy, I think it's probably worth giving some context on why there's so much confusion right now in crypto specifically, why we're seeing this divergence in price between, divergence in price between crypto when it comes to fundamentals. And obviously, virtually every other asset class is doing great, except for crypto. So yeah, before we dive in, what do we think this week? What's the general sentiment on CT?
I feel like general sentiment is pretty bad. You know, the vibes are certainly not immaculate. People have been waiting and they've been waiting for this rotation, and it's never come. Every time that the dollar drops, Bitcoin also drops. So not only are you getting devalued and debased in fiat, the value of Bitcoin is dropping alongside that. So it kind of feels like a bit of insult is being added to injury. Vibes are struggling. Thomas, how are you feeling? What's it like on the ground over in the US?
Yeah, I mean, there's a lot of pain out there, right? I mean, everybody's celebrating, their metals are super high. Everybody seems to have some sort of silver collection that they've been holding on to for years and years, and they want to show. But I mean, I also feel pretty positive, right? We had Matt Hogan on the big picture yesterday, and he left me pretty inspired, right? You know, the fundamentals are there and everything's humming along really well, just the price isn't there. Right. So eventually, I think that does catch up. And I'm sure we'll get into some bigger numbers that he was throwing around yesterday. But it is painful in the short term. Right. And one of the takeaways is to not look at the 1 minute chart, but to kind of zoom out and look at it from a much larger perspective. Right.
Which is so difficult. I think we're all glued to that, daily chart, the hourly chart. It's not looking great. But just before coming on, I looked at the infamous now crypto fear and greed index chart, and it was sort of neutral last week. I think we got close to about 50, which is right down the middle. I think partly to do with all the attention that was on crypto at the Davos World Economic Forum. World leaders, central bankers, all talking about tokenization and stablecoins, sort of pushed momentum back in the right direction. And then for a few reasons that we'll get into in just a moment, we seem to be slipping back into that fear zone. I think we're about 28 points on that. So yeah, if anyone is listening to this and you feel the opposite, if you feel extremely optimistic, if you think it is inevitable that prices catch up to fundamentals, do let us know what is making you feel that way. Likewise, if you feel actually that people are too optimistic and it's game over and it's time to pack up, let me know why you think that way as well. I'm curious what's driving that sort of opinion, given all the asset classes that we're seeing out there performing really, really well, and crypto sort of lagging the fundamentals. But let's do some housekeeping before we dive into this newsletter here. We mentioned Davos there. We mentioned the World Economic Forum. It was interesting for a whole list of reasons. And we spoke, as Thomas was mentioning, with Matt Hogan yesterday. He was actually there. He gave 2 talks at Davos. It's fascinating to hear about. He spoke to some degens. He spoke to the exact opposite end of the spectrum. These TradFi giants, institutional giants. So he's really there representing our industry, both to the degens and the more traditional investors. He gave us his macro takes. It was great, but sort of shifting our attention back into crypto land. When we look at the price action over the last 7 days, let's call it a post-Davos chart for the sake of argument. You look at the S&P 500 and various indexes, and then you look at gold, and then you compare crypto to it. what we saw was, I think it was Sunday this happened, most of crypto dipped by between 8 to 12% as a result of all of these policy shocks, and the stock market didn't really move, which was quite interesting. Metals continued their run to all-time highs, and we'll talk about that in just a second. But for context here, I think it's worth mentioning that this comes from a single conversation, if you will, right, that creates this ripple effect that ends up negatively impacting crypto prices. And it started with Mark Carney talking about how he was sort of sick of Trump bullying people, and that the middle powers of the world, if you will, right, the UKs, the Germanys, the Canadas, should sort of coordinate independently. And he was even floating closer ties with China. He said, look, we're going to stop doing trade with America. We're going to do trade with China. Trump threw his toys at the pram at a bit of a hissy fit. He turned around and said, okay, well, if you do that, first of all, China will eat you up. Secondly, we're going to slap 100% tariff on all goods entering the US from Canada. Markets obviously hate that. So risk assets sort of sold off. The dollar continued to get a bit weaker. Trump was asked about that on Air Force One. That's quite an interesting conversation. And then money, interestingly, rushes into gold and silver and copper and palladium and all these metals. So that was quite interesting. One of the most insane price charts I've ever seen in my lifetime is the spike of gold up to $5,600, and it sort of dumps back down overnight at market open to $5,100. Then it bounces again all in the space of a few hours. And we're talking about a swing in market cap that's 3 times the entirety of Bitcoin's market cap in about, 7 to 8 hours, right? Meanwhile, we expect crypto to experience these sort of swings as well. It doesn't happen. Crypto prices tend to trend downwards throughout the whole week as well. So I think zooming out, right, gold goes up, Bitcoin's going sideways, but then when gold goes down, Bitcoin's going down. And this has a massive impact on all the other crypto prices as well. So it's a confusing backdrop. It's a noisy backdrop. The volatility's there. I think it's safe to argue that capital is moving. We expect some of that to sort of swing back in crypto's direction in the coming months as well. And I think that is probably a good time to jump into this newsletter, Finn. Are all of these macro headwinds, some of them are tailwinds, are they going to impact crypto in the immediate future, do we think? And I'll pull up the newsletter as well.
Yeah, I think they're impacting crypto just as readily as they're impacting every other market in the world. I think crypto is really taking the brunt of a lot of this. There seems to be very little upside in the space of a lot of downside. It seems like you're not really getting a fair deal, really, when you see that the dollar is getting absolutely pummeled and then Bitcoin is also getting pummeled while metals seem to be holding up pretty well. What stands out, though, is that I have never seen this level of volatility in metals ever. I don't think anybody has in my lifetime. These largest assets in the world that are meant to be the most boring, shiny rocks that boomers hold on to for 50 years, they're moving 10% in a day. You know, this is unprecedented at a level that we have not seen before. And they're actually trading kind of like what you might see on pump.fun. You know, someone bundles something at 10K and it goes to 60K and then drops back down to 50K after that. So it's absolute chaos. Heading on-chain, though, things are looking a bit better. You know, the Memecoin trenches are having a bit of life. We saw Penguin run up to 100 million, so people are optimistic, some people are making money. And WisdomTree is also bringing its billion-dollar funds on-chain as well. So amidst the carnage, amidst the calamity, there are still good things happening. Momentum is still heading in a positive direction for fundamentals. So we can jump straight into this if we're all set there.
Let's dive into it. Let's scroll down a little bit. In the meantime, Finn, we have a question from the community. Curious what your take on this is. What's our faith in Solana, about Solana within the next 6 months? I think safe to say quite a few of the stories that we're going to touch on today relate to this, but just at a high level, maybe from both of you, what do we think about Solana over the next 6 months?
Yeah, I'm probably the resident bull here. I like where we are right now. I mean, obviously, you know, you look at the chart today, it doesn't look very good. But I mean, if you start looking at other things like on-chain transactions, you look at, you know, revenue, you look at any sort of metric that you want to follow, and Solana's doing very well, right? So I think that we are in a good place. You know, I'm going to just follow along with Matt Hogan on the fundamentals are there. Things are working fantastic. Price will eventually turn around. Whether that happens in 6 months or longer, I mean, I think that it will happen in the next 6 months myself. Obviously, you know, not financial advice, but that's how I'm positioned.
Yeah, I would echo a lot of that. I think despite prices being bad and markets being messy, there's still so many incredible things happening on Solana every single day. App revenue is leading all chains consistently week after week. There's so many apps being launched all the time. There's so many teams building new apps. I think what's fascinating at the moment is, while markets are down, there's so much volatility that if you're interested in, providing liquidity, there's tremendous options for that. And the new spate of RWAs has only accelerated that. You can provide liquidity on all kinds of stocks and metals now. That means that even though, Solana might be boring or going down in terms of price, there's just so many ways to stay on chain and stay active in DeFi without bearing the brunt of that negative crypto price action. So,
For sure.
Even if crypto prices are down, RWAs are still moving at full force, and you can kind of hold out in those assets while you're waiting for Sol to find a bottom.
Yep.
Obviously,
There's
not financial
unlike
advice.
previous cycles. Yeah, I think you're absolutely spot on there. You don't need to off ramp everything and wait for the sort of storm to pass and then come back on chain. You can literally store your assets on chain and get yield on them as well, which is super exciting. And just to add to that, one of the takeaways that I had from listening to all the conversations at Davos that were more crypto adjacent, Brad Garlinghouse came out and he said, "I will go on record." This is the Ripple co-founder, friend of the banks. He came out and said, "Look, I will go on record and say that within 2026, we likely see crypto back at all-time highs." So make of that what you will. But I think if the co-founder of XRP is in a position with confidence to argue that, then with all of the on-chain metrics and fundamentals for Solana being where they are, I think safe to say we're in a pretty good position. And that brings us to the newsletter. Finn, first story is from Cathie Wood, another one of these sort of mystical figures that tends to make some incredible calls. Not all of them work out, but help me get a sense of why this is a wild sort of change of events here. Seemingly out of nowhere, Cathie Wood turns around and says, "Hey, look, actually part of the reason why we're having so much confusion and why price is lagging behind fundamentals is maybe going back in time to 1010," and she's pointing fingers at Binance. Yeah, what's going on?
Yeah, so Cathie Wood, CEO of ARK Invest, she's gone on Fox Business. She's gone to the mainstream media, and she is preaching optimism. She's saying, "I think the bottom is in sight. I think we've kind of dealt through most of the dramas of 1010 and that horrendous liquidation event that wiped us all out pretty much, or anyone who at least had any amount of leverage got wiped out there." What was fascinating about this is that Cathie Wood told Fox Business that Binance was responsible for the software glitch that caused 1010. She claimed this, and then a lot of other people kind of jumped on the bandwagon to point fingers at Binance and at CZ as well, who admittedly hasn't been involved in Binance directly. He's been told he can't be involved since the charges. But the OKX co-founder Star Zhu also came out and said, Binance is manipulating the industry towards their own ends. It was some quite thinly veiled criticism. And everybody since then has just piled in on Binance and blamed Binance for the 1010 crash. There may be some evidence to suggest that Binance's software glitch perhaps caused a lot of damage. I think it's important to note in this that Cathie Wood actually bought Coinbase shares. She bought $21 million worth of Coinbase shares a few weeks ago. So, maybe there's that angle there as well, that she wanted to discredit Binance a bit on that side as well. CZ ultimately, cool as a cucumber, waved this off. He called it a coordinated attack. But it seems that as soon as price goes down, everyone starts getting out their torches and pitchforks, and they're looking for someone to blame. So, Thomas, what's your read on this? Do you think Binance is guilty of this 1010 that's still affecting us so deeply?
I don't think their hands are free of this. I mean, a lot of what happened on Binance, and I think that you can. I mean, everyone's pointing the finger at them, and I think that there's a lot of data behind it, right? I did a video based on 1010. It was more around, was DeFi dead? But the central cause of all of those liquidations was Binance, right? So it's hard to not look at them and say that they had a role to play. Whether it was 100% their fault, I'd say no, right? There's a lot of other things going on in the market right now. I mean, obviously we've got, the debasement trade going on. Central banks are buying a ton of gold right now. I think that was it Cathie Wood that put out a $7,000 gold price as well.
It was part of that. She called the recent gold top, right? She said, "Hey, look, this is insane. It's unsustainable. We're probably going to see a bit of a blow off top." What happened, which sort of makes her look like a genius, is an immediate correction from 5,600 down to $5,100 an ounce. And then, as we mentioned a second ago, the sort of market cap rises back. I think 5,200, 5,300 now, something along those lines. But when you manage to call something that monumental, it makes you look like a genius. Right. So I'm not sure where the 7,000 figure comes from, but it is a widely touted figure of what price gold will reach per ounce in the coming years.
Yeah, and that's kind of what she's known for too, right? She was pretty early to Bitcoin. She was one of like the main early speakers in like the 2017 rally. She'd go on the mainstream news and she would talk about Bitcoin early. So she's definitely a big voice in the space, and she commands a lot of respect because of that. But yeah, I mean, whether she's necessarily 100% right on all her predictions, that's a different story. How her fund is doing, that's a different story as well. But she's definitely a good figurehead and a good speaker about this. And I think that she also kind of digs into the 4-year cycle, and I think that's a big topic about what's going on. And I think even Matt Hogan touched on this yesterday, right? Bitcoin crypto normally goes in a 4-year cycle. He's historically said that there is no more 4-year cycle, but admitted that there actually was a bear market, that 2025, he said, was primarily a bear market, right? So was that the 4-year cycle hitting, or are we past that? I don't know, right? What are your guys' thoughts on that?
I'm not convinced in the 2025 was a bear market line. Like we hit, I think, 2 Bitcoin all-time highs in 2025. So for me, there's no way that we can call that a bear market. We can consider it to be in the sense of halving cycles and institutional flows and all that. But to say that we had a bear market at the same time we had Bitcoin all-time highs, to me, doesn't add up.
Fair.
I'm gonna remain quiet on this one. I think whatever way you look at it, you can make it make sense, right? So Hunter Horsley makes it make sense by sort of retrofitting a little bit of the data that we see here, and he says, "Here's what I see happening on 4-year cycles." He says the common view is that people believe in 4-year cycles, and what 2026 will thus be a down year for BTC. Now, to your point, Thomas, Matt Hogan was basically saying yesterday that to a certain extent, we front ran that expectation because so many people expected it to happen that they sold early. We had that massive blow off top, and the sort of bear market came earlier than it was expected or than it was supposed to, because so many people expected it to happen in 2026. So, the second order effect is that the 2025 sellers caused 2025 to be the beginning of the bear market, is what he's arguing here as well. And I think when you look back, you can make these things. You can make these arguments with a lot of conviction. At the end of the day, we're not going to know until very late into 2026 when the midterms have happened, when we know whether or not the Clarity Act is going to pass, when we know what happens to stock markets, what happens to the US dollar. There's so many variables at the moment that I think it's difficult to say. But
yeah, hey
overall,
Jack,
as we mentioned a second ago, the fundamentals are solid, and price should rather naturally catch up to that.
Sorry, I kind of interrupted you there, Jack, for a
Not
second.
at all.
But I've got to bring something up. Okay, so we talked about politics. You're talking about the U.S. dollar, the Clarity Act. It's like, when can we start looking past the U.S. politics and they'll stop affecting our bags? It's like I'm American and I don't want to follow politics this close anymore.
Well, I tell you what, I miss the good old days when an Elon Musk tweet was all that markets hinged on,
Yeah.
or it would be an obscure publication would put out an article saying China's banning crypto again, and markets would react to that, or some small exchange with a couple $1 billion would go belly up, and like that would be the sort of story of the day. But yeah, now one tweet from a politician, as you mentioned, Thomas, can send markets into a sort of tailspin. But on the other hand, we have ETFs, right? So I think the holder distribution is so different now, that as much as these sort of events, these externalities can cause volatility, we did a few pieces covering the sort of overall 2026 crypto predictions, if you will, and quite a few of the biggest analysis firms out there said that they expect 2026 to be a lot less volatile, not only compared to previous years, but in comparison to assets like Nvidia as well. Remains to be seen if that is the case. So if we go back down to, for example, 75k Bitcoin, and then Solana's, I don't know, heavens forbid, around $100 or lower, then it goes back up to 200. That's probably going to be a lot more volatility than Nvidia experiences in a 12-month period. But again, it's all, as Finn would call it, chart astrology, and you're just sort of plucking numbers out of thin air. So I think with that, we can probably slide over into our next story here. This is quite an interesting one as well. Let me pull it up on the newsletter here. I found this interesting because it's a huge number, right? You see 143 billion asset manager WisdomTree expanding tokenized funds into Solana. It's a wow. It's an amazing. It's a big number. And as you wrote here, Finn, it's it's not an isolated incident. And I want to share something here very quickly as well that sort of ties into this story, if you will, because I feel like we risk being desensitized to these headlines, right? $1 trillion asset manager comes to Solana, $1 billion asset manager comes to Solana, tokens are being launched, and this is happening, and we sort of forget why, right? And again, the sort of new wave of institutions that we've seen coming to Solana in the last 12 months is not, they're not isolated incidents. It is a whole series. So I came across this earlier today. Toli said that the cost to send an on-chain token now equals the cost of basically moving memory around on a computer. And then he goes a little bit deeper. He gives this super specific example, which I think we can all relate to as stablecoin users, but also people that have credit cards and as people that have seekers. So it's sort of touching all 3 points there. Toli says we sold around 150,000 or so seekers, and half of those were paid in stablecoins. I certainly did. And he breaks that down. He says about $40 million was then received through credit cards, and another $40 million was received through stablecoins. So 50-50 split. And he says, but, and this is where it gets sticky, as a merchant, Solana Mobile had to pay, obviously, a fee on those credit card payments, right? So it's about 2%. Plus, they have to wait 60 to 90 days to receive those funds that they generate from selling seekers. So a bit of quick maths, 2% of 40 million is what, 800,000? And if you get 800,000, it's not a cost if you receive all of your revenue through stablecoins. So if you're a merchant and you're selling a $500 device, let's say the Seeker, and you sell as many as the Solana Mobile team did, then that's $800,000, and that's 1,600 devices of revenue that the credit card issuers and the intermediaries are taking from you. And it's a very clear argument, I think, why stablecoins are inevitable at this point, right? So on a side note, by the way, he also said in this interview that that 800,000 equates roughly to the salary of 3 engineers. So clearly the 3 of us are in the wrong line of work. We need to maybe switch professions. But I think it speaks to the heart of why stable coins, tokenization in general, it's a no-brainer, it's inevitable, and it allows us to circumvent as an industry some of these inefficiencies that Toli was talking about as well that come from TradFi. So yeah, my quick take on that, not so quick take, is that whether you like it or not, this newfound efficiency is bringing these large asset managers like WisdomTree to Solana, which is exactly what we see in this headline here. Finn, take it away. $143 billion asset manager, tokenized funds coming to Solana. Why is this pivotal?
Yeah, so WisdomTree, obviously 10-figure institutional fund, bringing a bunch of their assets on chain to Solana. Both retail and institutional investors are going to be able to access this through WisdomTree's own platforms. I think this one is cool, and it is a bit interesting because I was chatting with in DMs with Nick Dukoff, the head of institutional growth at the Solana Foundation earlier, and he said that certain of these WisdomTree assets can actually be freely transferred between wallets. So it's not necessarily kept to institutional and accredited investors. These can be freely moved around between wallets, between people. There's no secondary market for them yet, and they can't be kind of lent out or borrowed against at the moment. That might be coming in the future. But it seems that we're actually getting some progress on making these treasury funds and these more traditional assets, let's say, be a bit more composable throughout Solana DeFi. So that's a great step forward. Otherwise, we can see here in the newsletter that the total market size of Solana's RWA market is at about 1.2 billion. I feel like it was at 1 billion just a few weeks ago. So momentum is steadily growing there, and it's really great to see.
Yeah,
it certainly is. I don't know if you guys saw the comments coming through there just a second ago. One of the community members says he's been building on his Seeker, and he likes our point about stable coins as well. Thomas, take it away.
Yeah, I'm so bullish on tokenization. I mean, this has been something that it's been a big topic in crypto for a very long time, right? You could tokenize everything. And I feel like that is actually coming true right now. And I feel like we're starting to see it all happen on Solana, right? The rise of tokenized stocks is going fantastically. Tokenized metals going really well. I know that Remora just passed $110 million in trading volume, 7 million assets under management. So, I mean, it's going really really well, and it's all happening. And I think that institutions are realizing this, and they have a lot of money that they want to put on chain, right? We have Thomas Cohen coming on next Thursday. He's the head of tokenization from Galaxy. I'm really excited about having him on the big picture, but we also talked to him at Breakpoint, and they've got a $5 trillion fund that they want to put all of it on chain, right? You know, this is size that doesn't really make sense to me, but this is something that, you know, they see the advantage of tokenizing it, and they're going to be doing it, right? So this is going to be an awesome time. And if you guys do want to hear about that, we've got Thursday 11 a.m. Eastern time, and the big picture will be on that. So tune in.
Absolutely, that's going to be a really exciting one. Finn, you've written at the end of this article here, more RWAs to come. Clearly, there are more RWAs to come. What do you think we should ask Thomas Cohen as he's head of tokenization at Galaxy? Obviously, one of the biggest players in the industry. What should we ask him to get a clearer idea of when and how much? And I guess building on that question that Thomas asked him in Breakpoint in Abu Dhabi, he said, of that 5 trillion or so state fund AUM, State Street AUM, sorry, how much of it do you expect to see coming on chain? And he said, well, eventually all of it. But of course, we don't really have clear timelines. So yeah, what do you think we should ask him when we talk to him next Thursday?
Yeah, I would want to push him a bit and try and get some clarity on when it's actually going to happen, because it's very easy for these $1 trillion asset managers to come on and say, yeah, we're bringing 50 billion on chain. It's going to be massive. It's going to change everything. And then, you know, the asset launches, it gets maybe 18 holders. No one actually uses it. I think there needs to be more of a focus on making sure things are DeFi compatible and DeFi composable. There's no point to me in, you know, making a big deal about bringing something on chain if it's going to sit in a wallet that is controlled by WisdomTree, that has to be accessed through a KYC gated platform. Yeah, I want to see more fundamental core DeFi tenets involved in this.
Yeah, it's a really good point. I think it goes to it talks to something that one of the comments here said earlier on. He said, I think the focus on macro headwinds is a bit. It's hard for new people coming on board. Paraphrasing here, he says, now it feels like crypto is waiting for the suits to save them. I mean, absolutely, yeah. So if we're sitting around waiting for $5 trillion to come on chain and it's going to sit there and do nothing, then big nothing burger. So I totally agree with you on this comment as well. We are looking for assets to be deployed on chain rather than just sitting around. Now, next story, talk about things moving on chain. This story keeps getting interesting, more and more interesting by the week. I know, Thomas, you were covering this, and between doing the research and actually publishing the piece, the numbers had moved so much they had to go and sort of reword a lot of it. We are talking, of course, about the Trump family's World Liberty and their USD1 stablecoin, which surged by 191%, so quadrupled in a very short period of time, actually, since writing this. I feel like the crypto industry can't get enough of the Trumps. Interesting angle here. Finn, the headline again is the Trump family-run World Liberty stablecoin USD1 just grew Solana supply by 191% in 30 days. That's pretty insane growth, right?
Yeah, and actually that headline is now out of date. So it says 191%. I checked that earlier today, and it's actually at about 290%. So World Liberty Fi's coin USD1 launched in September, and nobody really cared. And then in the past past 30 days, they've introduced a slew of new DeFi integrations. They're on Camino. They're funding a trading competition on Axiom, and it's really, really ramping up the activity. We saw the same thing with PayPal USD last year, maybe even the year before. Where as soon as you start putting in incentives, all of a sudden everybody wants more of these coins. The biggest story here really is, can it maintain that momentum? So again, PyUSD is an excellent example. As soon as those incentives turned off, the supply kind of collapsed and people stopped using it. So how do you make sure that you kind of penetrate deeper into the ecosystem so that you aren't relying on incentives to find usage? Thomas, you did a whole video on this. What's your feeling on USD1? And more to that, do we need so many stable coins? I feel like everybody's got their own stable coin now, and it's actually counterproductive to having liquid, efficient markets.
I have a lot of thoughts on USD1. So first of all, I like the diversity in stable coins. You know, we're very reliant on USDC and Solana, right? So to have a competitor that's actually challenging them, I think is fantastic. And you know, a lot of the idea behind the video was like they're actually rewarding use a lot more than just like parking your stable coins in a DeFi protocol and earning some rewards on that. Like they're doing some of that, but they're rewarding use. So people are actually using USD1. You know, they're like their bonk fund partnership. They're rewarding like they have like $200,000 a week in rewards for traders, and you're using the USD1 coin, right? Like if you go to Titan and you set a limit order, you're setting it in USD1 right now. So it's a completely different approach that I think is working, and I think it's probably pretty sticky. You know, one thing that they did, I of course was, you know, focused on Solana and what they were doing, and it's hard to miss all their partnerships. But right after I got done with my video, they made a massive release where they were doing a bunch of rewards on Binance Smart Chain. So they are like fully diversifying. They're fully going after this, and like they're full steam ahead. Like their business development team, their biz dev team is in overdrive right now, and they're totally leveraging, you know, every relationship for this. So they're doing a good job, you know, and it's interesting, you know, of course they're like using the Trump name for all of this, but it's getting a lot of traction. It's hard to ignore at this point, right? I don't know what your thoughts are on that, Jack, but
Well, the second part of Finn's article here goes on to take the other side of the story, if you will, and it says sort of a yes but framing, right? And it says there's still some criticism of this 200 grand a week. You were talking about some of these rewards. There's the Binance reward program as well. There's this trading competition. So I mean, Finn's done the research, but I kind of find myself being pulled over towards this yes but side of the argument as well. Finn, maybe you want to talk us through this, but still missing key integrations. That's one side of it. And then the criticism of this $200,000 USD1 trading competition. Like, what's the core of this frustration that people have?
So the first thing is actually when we talk about USD1 missing integrations, I think that's actually almost more of a bull catalyst, because USDC, USDT, they're everywhere. They're completely ubiquitous. They're in Camino, they're in Jupiterland, they're everywhere. USD1 is actually only on Camino now as far as lending and borrowing goes. So the fact that they still have integrations to come is probably more fuel for the fire rather than a yes but. But the other part of that is that, if you scroll down a bit further, USD1 is being used to incentivize trading competition. And basically what's happening in these trading competitions is that the same old story of people with a lot of copy traders are farming people who come after them. They're, allegedly running bundle scams and then dumping on the people who are buying after them. So people are criticizing the coin for that. Now, I think that's kind of perhaps a misaligned criticism in the sense that if you play stupid games, you're going to win stupid prizes. Everybody who's trading meme coins on these terminals, they know what they're getting in for. They know the game. So if they're going after these rewards and they're not getting them, that's kind of on them. But yeah, people would argue that USD1 is incentivizing the wrong kind of on-chain behavior. But I think that's just the market, and the market's going to do what the market's going to do, regardless of what people think or regardless of the ethics.
I think that's fair. I think that's a fair take. And just going back to something you said a second ago, as likely most of the SolanaFloor listeners out there will know, for months now, we've been covering this so-called stablecoin value leak story on Solana, if you will. We know that Circle's USDC has massive stablecoin market share dominance. Fluctuates, but it's gone up as high as 70%. I think like 60 to 70 is fairly standard. But they have a deal with Coinbase essentially, where a large chunk of the revenue from USDC leaves the Solana ecosystem and it goes to Coinbase and then indirectly to Base, which is a competitor. So the ecosystem is definitely ready for some stablecoin innovation. I know Thomas wrote about this recently as well. We have projects like Keel and Hilo USD sort of moving into that arena to fill that gap as well. So there's at least two names to watch out for as far as stablecoin innovation goes. And what we're seeing over the last well, 24 hours, but definitely the week or so as well, with USD1 is that they're out here. They're making moves. If it can quadruple in a very short period of time, I think that is another name to watch out for. Thomas, final thought from you then. USD1, are we calling this stablecoin innovation, or does it more fit into the category of using on-chain mechanics to sort of flywheel attention and flywheel on-chain activity?
Yeah, I don't know if it's necessarily innovation, right? I think it's the adoption of it and the way that they're doing it is the story, and they're doing a very good job at that. So I think that that's kind of what the focus of what I was thinking is. But yeah, I mean it's good either way for people to be competing on that space, right? Like, why not have more stable coins? So I'm bullish on it. I like the idea of there being more stable coins, and it opens the door for other teams. Hey, look at how to do this. This is a playbook that you could follow, a template. Reward the users, reward use, and look at the outcomes. So I hope to see more of this actually.
I think we will. And for anyone wondering, this is the video that you can go and learn more about Trump's World Liberty Financial and the USD1 stablecoin as well. Now, this next story is, I think, it's okay. It's definitely the funniest story of the week, but it made me giggle because it just sort of keeps getting interesting, and there's a lot of he said, she said, as you said. But yeah, fellas, I think aside from giggling about our favorite on-chain sleuth ZachXBT's exploits, it's wild that this is young kids stealing money from their parents in this story. The US government's involved, on-chain investigations are involved. Then it gets worse. This guy basically got caught from a video or a screen recording of him flexing how much money he'd stolen on chain. It gets really, really sticky. So headline, Finn, US Marshals probe $90 million theft after ZachXBT investigation. What on earth is going on here?
Yeah, this story is an absolute humdinger, to be honest. I think this is one of the funniest stories we've read all year. As you mentioned, the son of an internal contractor with the US Marshals was able to get his hand on the keys to wallets that were linked to $90 million worth of theft. He then went online and he flexed on his bros in the group chat and he said, "I've got X millions." And the other crypto crime bros laughed at him and said, "Nah, I've got more millions than you." It's diabolical, but ZachXBT kind of figured this out. He connected the dots, and we were able to actually put a name on this guy. So John DeGita is the guilty culprit in this factor. And now the US Marshals are kind of looking at themselves, going, "How did this happen? How did this random kid get access to $90 million worth of, or $23 million, let's say, worth of stolen funds?" And these are government seized assets, so it's a bit of a horrendous OPSEC blunder. And then to make it worse, John Lick hopped on pump.fun and he launched his own coin to try and piggyback off a bit more and get a bit more money out of the whole fiasco. And even pump.fun, who has hosted all kinds of debauchery on their platform, unnamed it, they deplatformed it, they tried to take it down as much as they could. They removed the name on the chart. So yeah, if even pump.fun is censoring you, you've done something terribly wrong.
I mean, I suspect the US government's funds being involved had something to do with the sort of harsh and decisive action that pump.fun took, right? And they're otherwise, as you said, pretty laissez-faire about what happens on the platform. But for anyone wondering, what you're seeing on screen right now is Mr. John Lick himself. There's some funny pictures that have been released of him. This section particularly got me. Can we go band for band? People flexing how many millions they have, and most of it turns out to be stolen. Thomas, I suspect you were equally entertained by this.
Thoroughly entertained. I mean, a humdinger is a great way to describe it. It's absolutely hilarious. I mean, it's ridiculous and it shouldn't be happening, but the fact that it did, it's like, of course, ZachXBT found it. Shout out to him. He's like the best, detective when it comes to it. So of course he found them. And I mean, launching a meme coin called Lick after all of this, I mean, it just makes for a great story. I love it.
You can't make it up.
Yeah. But at the same time, this probably just scratches on the surface of what happens in the, the underworld crypto crime circles. There must be all kinds of horrendous banter that goes on between these guys that we're not aware of at all. And if it's government seized assets as well, like the OPSEC that must have fallen through for this to happen is truly dreadful.
Yeah, it is. And just going back to this tweet as well, it just it captures where we are so perfectly. Could have just sailed off into the sunset with his stolen funds. Instead, he decided to get into a peeing context on Telegram, and yeah, hopefully more to follow. I suspect there'll be some more news, maybe arrests coming out as a result of this. Yeah,
Yeah.
the
Quick
fact that he
one,
launched the token. Yeah, go on.
quick squirrely question, maybe for you, Thomas Bahamas, because you're from the US. What should the US do with seized crypto assets? Like, should they just sit there in an account and never get touched ever again? Should they be, sold off and used for charity or for, pro-government purposes? What's the takeaway? How should these government seized funds be used?
Strategic reserve. They should hold on to these. I mean,
Good
it's
answer.
tough, right? They're not going to like return them, any of these, right? They are seized. So I think that they just hang on to them. I think that they made a pretty big announcement early on that they weren't going to sell any of these seized funds. So I hope that they maintain that and keep it on the balance sheet.
I agree. Now, this is sort of slightly adjacent, but I read an article not too long ago. There was some bounty hunter, sorry, a treasure hunter in America, and he found what he expected to be was this like huge stolen amount of gold and silver somewhere. So he calls the FBI and he says, "Hey, look, I found all this stuff. My metal detector's going off like crazy." And now he's suing the FBI because apparently the FBI turned up in the middle of the night with diggers, excavators, ripped half a mountainside open, found all this gold, and he estimates it to be worth $1.2 billion in today's money. So he got absolutely rugged by the feds.
Ultimate rug.
He got rugged. So that was an interesting story that I thought I'd share with you guys. Now, getting back into this newsletter here, it continues to get interesting. I think particularly for the people that are interested in NFTs and meme coins, more specifically in Memecoin NFTs. The headline here is, will Moonbirds BIRB be any different from every other failed NFT meme coin? So a bit spicy, been sort of poking some fingers around there. But as we mentioned a second ago, the trenches are sort of feeling a bit of a revival potentially over the last week, if you will. Curious to see if this goes anywhere. The chart is looking good the last time I checked it out. But as Finn mentioned, this is sort of following in the footsteps of Penguins, huge project, Doodles, huge project. And you said it's joining Solana's chaotic meme coin economy as well. So I don't think I could have said that part better. But again, the chart looks decent. So what are we looking at here? And is it really enough to be causing widespread excitement, or is it just going to sort of fizzle out over a week or so, Finn?
Well, look, for me, we've seen NFT meme coins before, and they invariably all go the same way. Pengu's had some brief moments of looking really, really good and attracting a good bid, but generally these things launch and they go up for a bit, and then they just steadily bleed out. Obviously, I'm not painting a death cross on Moonbirds at all, but it seems like a kind of tried and true platform and a bit of a formula that these Ethereum NFT collections, they come over, they launch a meme coin on Solana, they make a bit of money, and then the coin just steadily exists and bleeds out. This one, the BIRB one, did ruffle a few feathers because a lot of the Moonbird NFT holders are subject to a 24-month vesting period, whereas everybody who got one of these soul-bound tokens on Solana for using Meteora or Orca or Seeker, they were able to sell their unlock or hold their unlock on day one. So a lot of people feeling a bit cheated by this, especially deep within the Moonbird community themselves. We saw the NFT floor price of Moonbirds crater after this got announced, the tokenomics. So people aren't happy, but like you say, the chart looks decent for how these generally go. I mean, it is down 50% since its peak, but pretty much everything is at this point. So it's hard to blame them for that. Ultimately, I think, yeah, these NFT meme coins, the story is repeatedly the same and they don't seem to do that well. So I don't see how BIRB is actually going to differentiate itself at this point. Thomas, you're an NFT guy. What are you feeling about this?
Yeah, I don't know. I don't know how I feel about this. I saw the chart. The chart actually went up a lot before the airdrop was actually complete. Is that right? Did I see that correctly?
Yeah.
Yeah, it was an interesting launch. So I had a couple of the BIRBs NFTs on one of my wallets. I went in, it wasn't working. And then I went in again, it started working, but then it's like you claim it and it goes into a game or something like that. And it was only $9, so I just like couldn't figure it out, so I just gave up on it. But I mean, I'd say that like I'm glad that the Moonbirds are. It seems like they're doing well because they're actually, pretty close to how I got into Solana in general. So like Kevin Rose, he was the original launcher of Moonbirds, and the reason why I bought my first Solana was he had a podcast that totally came on called Modern Finance, and he was talking about NFTs, how much fun it was, talking about Solana, and all kind of made sense. So I bought Solana after that podcast and it went up a ton. And then I minted my first NFT, a gecko, and I sold it for a 10x. And I've been addicted to NFTs ever since. So I like to see them doing good. I know that a lot of people say that Kevin Rose kind of came in and rugged and sold this NFT project for a lot, but it seems like they're doing a lot to kind of bring it back and revive it. So I like that they're doing that. I like that they launch a token on Solana. I don't know what kind of value they're bringing other than having a meme coin. So I'm not really sure. I'm not going to be holding it myself or anything, but it seems like a good story. If it does do well, I'd like it to do well, but I guess we'll see.
We have an interesting comment here from the chat. This is an interesting one. They say it's getting played out with this whole meme stuff. Let's get back to real use cases or value add instead of quick ways just to steal from other new people in the ecosystem and then wonder why people don't stay. Decent point. Any takers? Anyone want to challenge that? Or
yeah, okay. I'm going to challenge that because I think there will still be more real use cases, but we also have to have fun on chain, right? So I think that these type of launches are fun. They're good. Don't get too invested in these tokens forever. But I think that we're all here for tokens. Meme coins are fun, and I don't think they're going to go away, right? So whether you like them or not, they're always going to be part of Solana, I think. So I think we'll see more of them. And at the end of the day, if you can have fun with them, do it. But if not, maybe just stay away.
I feel like you just need to interchange the word fun with making money. Like it's fun if number goes up, basically, and if number goes down, then it's a whole lot less fun.
Fair.
Yeah, I think that there's another way of looking at it, and this is something that Tolly and Raj harp on a lot about, is that a lot of the use cases for emerging technology is entertainment based, and I think this is another outlet for that. And so while, yes, obviously the meme economy is a bit silly, it's a great proof of concept for how Solana can work at scale. We saw with the Trump launch, we saw hundreds of thousands of new wallets being onboarded, and we saw everything that came with that. And yes, people lost money, some people gained money, but ultimately it was a great stress test for the network, and it kind of highlighted some things that need to change for the network to continue to improve. So as much as it is a bit of a game, it helps us grow in the sense that it puts pressure on the system, and we learn from that.
Certainly. I think we can just hope that, if we get to a point where a majority of people that are coming on with the expectation of hope and maybe a little bit of profit, and they're getting absolutely wrecked and sent running off chain, with their tails tucked between their legs, then that probably isn't great optics, and nor is it great for onboarding, I think, is the sort of gist of what this gentleman's argument is. But totally agree with you. As far as proof of concept goes, as far as activity goes, let people have fun. It is a permissionless system. And I think there's a reason why only one, we're about to find out if it's two, of the stories in this 6-story newsletter are related to meme coins, and the rest of them are about billion-dollar asset managers coming on chain, about Cathie Wood, about so on and so forth. Much bigger stories, right? We're not in the same period of time as we once were, where almost everything was dominated by NFT and meme coin headlines.
Yeah, I'd agree with that.
What else do we have here? We have an interesting comment. It's really bad in the trenches. You can put some sort of spin on it. It's right there. It's not fun anymore. Again, paraphrasing here. This is the first time in 6 years I'm not spending my pension on crypto investing.
The trenches are cooked. The trenches are cooked. It's rough out there.
Yeah, that's a good one. Well, if it's the first time in 6 years that you're not spending your pension on crypto investing, hopefully that's a sign of you maturing as an investor. Maybe you have a much longer time horizon when it comes to the positions that you have, and you think, I'm going to buy metals, I'm going to diversify, I'm going to hold some stables on chain, I'm going to hold some metals on chain, and I'm going to buy some ETFs maybe here and there, and I'm not going to focus a vast majority of my disposable income on quick flips. So if that is the case, I congratulate you. We are all for mature investing. Now, let's switch over to our last, but certainly not least story. It is number 6 here. And it's again Memecoin related. Shock horror. I think a really good segue into this right now. It says Memecoin season shows signs of a strong return on Solana. I think the real question is how strong of a sign is it really showing? Finn, Thomas, you guys are a lot more into the trenches than I certainly have been. The last comment that we just heard of is arguing that maybe the sort of earlier energy that we felt in the trenches isn't there anymore. What are we thinking? Are we trading this new meme coin renaissance?
I'm personally not trading it, but I'm observing from a distance, and it looks like some people are having fun. Right, this started with Penguin, the delightful nihilistic Nietzschean penguin going off into the mountains. The White House got behind it. Social media got behind it in a big way and sent it all the way to 100 million market cap. And that has obviously triggered a bit of an onflow of people launching coins. People are trying to see if they can make it as well, make it out of the trenches in this sense. Deploys has hit the highest point in the last 11 months. Volume is also up. Pump Funds revenue went back over 2 million per day. So, there is activity. I think if the rest of the coins keep going down, it's not going to last very long. But ultimately, and this is the silver lining to all this, is that a thriving meme coin economy is really good for Solana's validators because they make more off fees, tips, and things like that. And if there's more happening in the trenches, then at least the validators can kind of get a bit of a profit off that. So validators been doing it tough recently. I think having a bit more on-chain action is helpful for them. So I kind of welcome it in that sense, as long as it's nice happy coins that go to 100 mil instead of trenches getting churned and spurtled out in the depths of the pump fund sub 10k. I think it's positive. I think it probably doesn't last. The thing that really stood out is that this is Pump Fund's biggest day since September 19, 2025. And at that time, Sol was worth $249. So we've dropped 50% since then. That was hard to read. Life comes at you fast. But yeah, this is what's happening in meme coin land. Thomas, are you dipping your toe in it all at the moment?
I am not, but it is interesting that we saw the market come back to life a little bit, and then all of a sudden meme coins come back pretty heavy, right? So I wonder, if the market does turn around and, we predicted Solana, would be going higher in about 6 months, I would probably guess that meme coins would come back as well, right? People on Solana are pretty trained, to be looking at very short time durations. They want the quick flip. It used to be NFTs that did this, and now it's meme coins. I personally am not trading them. Like I don't understand this market. I saw the Penguin coin go up. I don't know whether it's going to be like an instant dump or not. Like I see a lot of the meme coin chats kind of heating up a little bit more, but I don't know. I like that it's there. People are having fun. The memes were hilarious, but I don't personally have an edge in it or really understand what people are doing on there, right?
So to the comment that we just saw as well, it says Launchpad volume rebounds. We're seeing graduation rates improving as well, although they are low. I wonder if this is a sort of front running of a potential rebound back towards those 200 plus levels, and people think, hey, look, the fundamentals are so solid, and we've seen so many other asset classes rally to all-time highs that some of the investors out there think it's inevitable that Solana sort of experiences its own pushback to the all-time highs or previous all-time highs as the current price sort of catches up with fundamentals. Maybe people are trying to front run that and build positions in these larger memes out there and some of the newer memes in the hopes that, when retail does come flooding back, they can sort of have positions already built and then they don't have to sort of top blast these tokens. What do we think? Is that wishful thinking? Am I dreaming here?
I see it being indicative of one of two things. I think either this is the lagging effect of that small pump we had earlier in the month where we saw Bitcoin go back up to 95K and all of a sudden people are charged up. People are thinking that, all right, it's time to go. The cycle's starting again. Scaramucci's tweeting that the economy is back on. So I think a bit of money was made earlier in the month so that people then kind of rotated that further down the risk stack, and that led to this here. I think the other side of it is that people who trade meme coins, people who are on-chain natives and degens, they are so eager to have something to do. They're so ready to be bullish again that as soon as something picked up and we got that PVE runner that everybody's been dreaming of, everyone jumped on it as quickly as they could. So I think it's one of either of those two things. It really depends if Bitcoin is going to give us the green light so that then people can keep doing this. Yeah, I'm not sure.
I'm crossing my fingers. Okay, now we are nearing the end of the newsletter, which means we're very, very nearly at my favorite part, the stat of the week and the tweet of the week. But before we get to that, we have a quick fire round of honorable mentions here. I know Finn is eagerly awaiting the chance to sort of get through these like a machine gun, but I'm going to front run you. We were talking about front running a second ago. So let me do some front running of my own here, Finn. I have a feeling you're going to ask us which part of this list of honorable mentions we like the most. I have a feeling for Mr. Thomas Bahamas that it's going to be the on-chain metals and on-chain equities story that's right at the bottom. But let's see. Let's wait and see if that is going to be the case. You want to take it away? Honorable mentions, Finn.
Yes, so this week's honorable mentions: 21 Shares EU launches JSOL, the first European ETP backed by Jito Sol. I love this. Built-in staking rewards going into ETFs is wonderful, and it's good that the Europors finally get a bit more exposure. I'm happy for it. Binance pledges to convert $1 billion from its Seifu fund into BTC over the next 30 days. Is this an admission of guilt? I don't know. We can explore that a bit. Marinated Finance introduces dynamic commission bidding. So this is something, this is a new feature for their stake auction marketplace where validators can offer different commission structures. Solana Mobile offers a 50% discount on seekers when buyers pay in SKR. Miami is set to play host to Solana Accelerate USA on May 5. So I think this is tremendous. I'm really, really excited about this. Accelerate last year in New York was fantastic, and Miami probably going to back it up really, really well. And finally, Remora Markets records $100 million in cumulative volume. I believe that's 110 million now, so that's going really well. And Remora Markets has also hit 7 million in on-chain liquidity. So good stack of honorable mentions this week. Obviously, you're front-running me a bit there, Jack, but what are the favorites, boys?
All right. So very excited about. I'm very excited about. I'm excited about Remora. However, I have to admit that I bought another Seeker phone, 50% off, and I bought one. I used my Seeker rewards, and I mean, I couldn't pass it up. It was $250 for a phone.
That's totally fair. I might look disappointed. I'm not at all disappointed. I want it to be right, but it's good to know that I'm partly right. I think it's a great deal. So you paid in SKR for the phone, I imagine.
Yeah. So I got airdrop. Yeah. So I got airdrop Seeker coins, and they were running a promotion right now where it's 50% off for another phone. I wasn't anticipating buying another phone, but I was looking at it. I was like, this is too good of a deal. I need to upgrade my personal phone. I'm looking at a new iPhone. It's like $1,400 for that phone. And I was like, why not just buy the $250 and go, with Seeker for main? So that's what I'm doing.
I think that's totally valid. And not only that, Seeker Season 2 is active. I know we've touched on this in previous conversations and videos as well. So if you have a Seeker, great. You're obviously using the dApp store. You're downloading new things, exploring them, doing your swaps, getting your daily steps in, so on and so forth for Seeker Season 2 and the airdrop that's coming. But if you don't have a Seeker, it's probably a great time to not spend $500 when you can spend $250. And if you're as lucky as Mr. Thomas Bahamas, then you're probably going to get some or all of that rewarded back in the form of an airdrop as well. Now, I'm going to throw a bit of a curveball in that case about my favorite part of your honorable mentions this week. I've never been to Miami. It was honestly very, very low on my list of priorities of places to go until today, until when I read your delicious newsletter there, Finn. And I know you went to Accelerate it was New York last year that you went to, right?
Yes, that's correct.
Yeah. So I was at a wedding. Unfortunately, I couldn't join Accelerate that time round. So I think I've got a bit of FOMO left in, right? So I'm going to go ahead and say that this one is what stands out most to me. Because you mentioned that you had a pretty good time there talking to all sorts of builders and founders and sort of developers from the Solana ecosystem, and any excuse to cross the Atlantic. But I think maybe I'd go get a nice tan in Miami in May. What do we think? It's probably going to be quite sunny, no?
Yeah, I think it probably end of spring. I think actually probably Miami is probably always warm, right? Like it probably doesn't have seasons in the way that somewhere like New York would. Accelerate last year in New York was fantastic. I have zero doubt that Miami would back it up extremely well. Yeah, I I think it's a great step. You know, we'll see how well Accelerate Hong Kong goes, but keen to check out Miami in May.
We have a comment here as well that says, I want to go to more events this year. Well, you'll be happy to hear, my friend, that end of year, November, is going to be Breakpoint in London. I know not everybody loves London. Some people absolutely adore it. But Breakpoint is going to be bigger and better than ever. So shout out to Solana Events for organizing these incredible get-togethers IRL. I think it's great. And yeah, I would also like to attend more of these events. So who knows, maybe we meet in person in Miami in May. Now, let's discuss the sort of stat of the week, the state of the Solana ecosystem in a tweet that you do every week. Finn, I love this. This is my favorite part of your newsletter. And I'm kind of waiting for the day that you put something vanilla in there so I can make fun of you, but you haven't done that. This is once again something spicy. So let me switch over to this and we can have a look at your stat and the tweet of the week. What do we have here? It's SKR claimant status. Talk me through it.
Yep. So this is part of a data report thrown together by our data analyst, Ario. If you're curious to explore a bit more about what happened on SKR TGE Day, go check that out. This is a really great stat. So 50.8% of SKR recipients staked their entire stack. 34% sold their airdrop, and about 65.3% staked at least some amount. So this is an indicator that people are staking their SKR, they're committing long term, and they, are aligning themselves with Seeker long term. So good stat. Really happy with those staking numbers. I think that's a great indicator of how people are feeling about Seeker at this point. And yeah, go check out that report because there's a lot more information there, and you'll probably learn something quite interesting.
Absolutely. Scrolling a little bit further down, this is where it gets spicy. State of Solana in a tweet. I'm going to let you take this one away.
Yes. So we mentioned earlier, Cathie Wood blames Binance for this. The first comment here, Satiris says, truly insane how badly 1010 damaged the industry. Here in this chart, we can see that Bitcoin is absolutely nuked since 1010. Everything else has kept going up. Indexes, S&P 500's kept going up. NASDAQ 100's gone up. Gold's gone up. Everything keeps ripping, whereas Bitcoin has basically just nuked since, and it's never looked more alive. AJC has said, at this point, I'm just going to assume crypto will continually underperform until the entities/people responsible for 1010 are held accountable. Bracket, very unlikely. Yeah, a spicy take. 1010 did more damage than what we think. I think also this conversation only happens when coins are down, right? If we were at 92K still on BTC still, nobody would be pointing fingers at 1010. Nobody would be saying that this is the reason why it's down. Maybe there's some truth to that. I don't have a crystal ball. I can't see for sure whether Binance was responsible for the 1010 drama and everything that's come out since. But it's true that when you look at the chart like this, BTC is having a tough time when everything else is doing well.
Certainly, and I think it really compounds the frustration and the confusion that people are feeling if they're, let's say, abnormally crypto focused in their allocation. If they have too much SOL exposure, for example, they're probably thinking, what on earth is happening? Why is everything that's supposed to be a boring, not so volatile asset class going to new all-time highs? And I'm sort of struggling here. As we mentioned, it is most likely a matter of price lagging fundamentals, but it remains to be seen how far into 2026 that's going to be reversed. Gentleman here in the comments says, cough, cough, manipulation. Well, yeah, I mean, that's part of the discussion with Binance as well, right? People are saying the Binance cabal were behind this and the charts are being extremely manipulated. And to Finn's point earlier, CZ came out and said, look, this is sort of an orchestrated effort to paint Binance and CZ in an interesting light. I guess another interesting angle there is that CZ's pardon created some controversy earlier on in the year. There was a $2 billion stablecoin deal between World Liberty Financial and the Abu Dhabi state-backed fund, I believe MGX is the name. And soon after that, Donald Trump pardoned CZ. The media obviously sort of grilled him about it, and Trump snapped back at the media. There's one very interesting interaction between a reporter and Donald Trump where he says, what do you know about crypto? You know nothing. You're fake news. It's one of my favorite clapbacks from Donald Trump. So there's obviously a lot happening there behind the scenes with Binance. Again, we don't know. We don't know if it's manipulation. We don't know if this chart that you're seeing on screen right now, where the BTC price is just bled out against some of these other assets like stocks and such. We don't know if it's manipulated, but all we can do is focus on the fundamentals and say that price is likely to catch up. eventually as global liquidity continues to rise, as some of these sort of macro headwinds become less of an issue, less of a hurdle. And that brings me to the guest that we're going to be talking to next week, Thomas Cohen, who's the head of tokenization. We mentioned him earlier at Galaxy, one of the biggest names in the industry, Galaxy. They've been around for a long, long time. They know exactly what they're doing. The head of DeFi at Galaxy Digital, Michael Marcantonio, has spoken to Finn a few times as well, got some very, very interesting takes. So I'm curious if you have any questions about tokenization. The future of tokenization, obviously, was one of the hottest topics at the Davos World Economic Forum a week or so ago. It's going to keep coming up. It seems that even Larry Fink, the head of the CEO of BlackRock, says the future is tokenization. He said, right? So this is going to be a topic that we continue discussing. Next Thursday, the big picture, we're going to be talking to Thomas Cohen at 11 a.m. ET. We'll probably unpack the sort of the macro backdrop against which this growth in tokenization is being driven as well. So yeah, if you have any questions about tokenization in general, let us know. And with that, I want to thank you both, Finn and Thomas, for enlightening us, for sharing your thoughts, sharing your on-chain activities and your adventures. I'm going to say GN to you both, and I'll see you all next week.
GN, guys.
Yeah. Thank you guys very much, GN.